What's up, Gould Miners? In today's episode, we welcome to the show Justin Moy, the founder of the President's Club, a real estate investing fund that is specifically designed for high-performing salespeople to invest passively into real estate deals and eventually, over a 10-year period, replace the income that they are earning currently as a salesperson. This is a very unique fund, a very unique strategy that Justin is deploying, and something that's very near and dear to my heart. As a salesperson myself and someone who has led the sales organization, I see a major need for something like this, and Justin has filled it. In this episode, we talk about Justin's start as a salesperson and what led him to eventually transitioning into real estate investing. We also go over some of Justin's investing philosophies, and finally, we go deep into the mind of a salesperson and how Justin recommends any salesperson fast track themselves to success. And whether you are a salesperson or not, there are a lot of Gould nuggets in this one for you to enjoy. So without further ado, everyone, welcome to the show, Justin Moy. Justin, welcome to the Gould Mine.
Danny, man, I'm excited to be here. Excited to kick this show off with you. We've been following each other on LinkedIn and some other platforms for a little bit of time, trying to make this happen. So excited to finally be here.
Yeah, well, it's cool to be able to talk to a fellow Bay Area guy, and we'll get into like a lot of your philosophies and investing philosophies and everything like that. But one of the things that we share in common is that we both started really in residential real estate. Yeah.
Yeah.
So talk to me about that initial start and what caused you to kind of deviate from that initial path.
Yeah. So, man, I was very lucky with my career path. The very first office job I ever had, I was looking for internships when I was 16, 17 years old. And one of the ones that finally took me was an internship at a commercial real estate office. And I just really loved that industry right from there. I loved seeing the brokers work. I loved seeing them go out to the field, close big deals, celebrating these massive wins in the meetings. And, I was an intern, so I wasn't really doing that stuff. I was doing all the copies and making marketing materials and stuff like that. But I loved that environment and I loved that energy. And it was at a time in my life where I was struggling to find out what I wanted to do. I think it's pretty normal for, 17, 18-year-old kid to not really know what they want. But I just felt like that infectious energy was something that was exciting to me. Mm-hmm. So when I was 18 years old, I decided I was going to take a break from school. I wasn't going to go to college right away. And I got my real estate license. Mm-hmm. So, being out in the Bay Area, you don't have to go into the commercial space to close these massive deals. The home prices out there will float you pretty well. And so I was an 18-year-old kid. I got my license. I struggled for the first couple months of my business. And after about a 6-month timing or so, things took off. I started to do really well. And, that really set the seed that would come into me doing bigger deals and multifamily, me becoming an investor, being on the ownership side instead of just the broker side for reasons that I'm sure we'll get into here in a minute. But really sprouted from there. And so I turned 30 this year, and I've been really in real estate since I was about 17, 18 years old. So it's a field that I absolutely love being into, sort of by accident, but definitely love the office that I worked at there.
Yeah, that's awesome. So how did that initial sales career impact your ability to be a successful investor?
Yeah, well, money is one, right? It's hard for an 18-year-old kid to make the kind of money that you need to be able to invest and be able to get into these larger, apartment deals and commercial deals. So ever since then, I was always very, very hard set on, if you want to have a very, very successful life financially, at least early on, you've got to control your income. Whether you're an entrepreneur, you're an investor, you are a sales professional, you do side gigs, something to help you control your income. Because if you're just relying on climbing the corporate ladder as an average corporate employee, that path is a really, really long one. And the second thing is just the knowledge you gain. Or being a broker, I think, is a fantastic entry into it, because you don't need a ton of experience to get into brokering, or you need to be able to build your sales skills and your relationship skills, but you have your hands kind of in every aspect of the deal, from escrow to finding customers to the transaction itself. You get to be exposed to all the sorts of issues or problems that can come up in all types of deals. So I think a broker is a great ground where you're in everything a little bit, and you can learn just enough about all the different aspects of real estate and ownership and the transaction to be dangerous in those fields. And then you can pursue, other ventures outside of that. But a broker, to me, was the perfect kind of segue into learning a lot about the industry as a whole, following the macro trends, knowing the transactions and escrows. And that really gave me a good advantage when I got into the investor space, as opposed to somebody who might be, in regular corporate America doing something unrelated to real estate, where the learning curve is just a little bit steeper there.
One of the things that I've noticed now being in residential for over 9 years is that most realtors don't, to partake in their own, like, what was it, dealers that do their own, supplier, getting high on their own supply. Why is it that most realtors fail to kind of get there? Maybe they own a single family or like their own residence, but very few are savvy investors. Why do you think that is?
Yeah. So, that's interesting, because I've thought about that before too. And when I was in my real estate career early on, I had, as you go to a bunch of networking events, a lot of financial people were in those spaces, and I would ask them that question. And one answer that I think is a fair answer is, well, if your primary income is tied to real estate, maybe you don't want your investments in that realm too much as well. And I thought, okay, that's a pretty decent way of thinking about it. Another thing is, a lot of real estate agents, being a broker is actually the number one most failed business in this country. Now, part of that is a little bit skewed because some people get their license never really meaning for it to be full-time, or they do it as a hobby. So I'm sure there's a little bit of skew there, but I'm sure, your experience in the business has taught you it's a simple business, but it's not easy being a commission-only sales professional. So there's a lot of failure in this space. So I think on one hand, the real estate agents who are posting on social media and living this, glamorous lifestyle maybe don't have actually the glamour that they advertise. It's a tough business. And you own a business. So a lot of times you are investing a lot in that business, in your marketing, in your clients, investing back into that in hopes of getting more sales down the road. So just because maybe they're making big commissions or they're selling big houses, maybe they're not walking away with that much. And then another thing too is scarcity. And just that mindset of when you're a commission only sales representative, you do kind of have that inclining in the back of your head. Like, what if my deal shut off tomorrow? What if the market tanks tomorrow? What if I just close the last deal I'll close in the next, 7-8 months, year? Am I ready to send, big money to an investment or something else that I might need that? And so that's something I struggled with a lot when I was in real estate too. And I was never able to get away from that stress. That's one of the reasons why I actually stepped out of that box and into the owner box, because I couldn't ever shake that feeling of, now, what if I just close the last deal I'll close in the next 12 months? What happens to me then? Even if you have a full pipeline, right? You kind of always have that in the back of your mind. And so as an investor, what that mitigated that, because we have income coming in from the properties after they close, not just one big check at the closing and then, that's it. You're starting from square one again. So I think those are a few reasons why. Some of those are legit reasons in my opinion, and the others are a little bit mindset things. But I would say those are the most common things that I've found.
Yeah. And honestly, I don't know if this is a problem that we can necessarily solve on this podcast, but one of the questions that I've been asking myself is, what can we do to change that for the next generation of realtors? Because I'm seeing some of these younger kids, because some of the kids that join my team, they're like 18, 19, 20. They're already learning stuff that is way beyond what I knew at 18, 19, 20 years old, right? Yeah. So I do believe that this next generation is going to be very well informed. Whether or not they do anything additional with that information remains to be seen. But, outside of the education space, I'm just, kind of thinking out loud, like, what is it that we could do to kind of influence and change the narrative and kind of help that next generation of realtors? Again, I don't know if it's something that we could solve on this podcast, but it's something that I've been percolating in the back of my mind.
What's so interesting is I think future pacing is a big part of that, because when I was 18 years old and I got my license, if you told me, hey, start investing your money, I would have not even heard you. And at some point when you're not looking for something or something's not important to you, you don't really hear it and you don't really listen. One thing that really kind of kicked me into high gear is I remember there was this one day in my real estate sales career, and I had closed a couple of deals, maybe the month before. And for whatever reason, I woke up that morning just exhausted for like the 30th or 40th day in a row. Couldn't get out of bed. I had this routine. I'd always wake up. I'd always go to the gym. I've always been a big, meathead. I always powerlifted, was really into fitness. And I realized I was like, man, I haven't been to the gym in like 2-3 weeks. Let me go get a workout in. I had, the worst workout I ever had. I couldn't get myself to pick up the phone that day. I looked at my calendar and I just said, I don't know how long I could do this. I was waking up at 5 a.m. I wasn't done work until 7, 8 p.m. I was doing open houses on the weekends. And I just said, you know what? I just need a day. I canceled everything on my calendar and I just sat on my couch alone and just thought about my life and just thought about how long can I keep this up? I was making really, really great money. And part of the beliefs is, hey, I'm a 19-year-old, 20-year-old kid. I can't make this kind of money somewhere else. But man, I don't know if I could work like this for the next 40 years until I retire. And that to me was the big snapping moment that I said, okay, I need to start investing. What do my best clients do? I sold a lot to investors and helped them buy a lot of their next property. So I did their underwriting. I did some financial projections for them. I kind of got that space. They definitely lived better lives than me. I was always out there, managing escrows and transactions, and I'd send them an important document and they'd reply back, 3-4 days later, like, sorry, I'm in the Cayman Islands. And, they're always vacationing. And I thought to myself, man, I got to set up that life for myself.
Yeah.
And to me, when you want something, you have to future pace it, because nothing worth having you can have right away, right? You always got to put in the time before it. It could be 5 years, 10 years, 20 years plus to build the life you want. So of course, the earlier you start, the better it is for you. But that was the moment. I think everybody hits that moment in their career where they just, you call it burnout, or there's a lot of different names for it, where you just sit there and you just go, what the hell am I doing? And how can I do this? Is this sustainable for me in the life that I want? I was lucky that I had that conversation with myself at about 19, 20 years old. But I think people are going to have that conversation with themselves eventually. And if you can get to that younger generation, say, hey, I know you're okay with this hustle now, but as you evolve and as your life changes and your priorities change, you have families, you have other things to worry about. You're not 18, 19 years old anymore. Is this what you want? If it's not, then start thinking about that now so you can really play that long game and start with the end in mind. I think that's what helped me, and hopefully that helps other people listening too if they're in that space.
Dude, that is, you said it better than I ever could have. I mean, what you just said right there, if you are a younger, I don't even care if you're real estate, right? But if you're a younger individual, you're listening to this podcast, I would go back and listen to that about five times, and really internalize it, because it's true. It's absolutely true. I mean, like if I had it to do over again, obviously I wouldn't have gone back and maybe done things a little bit differently, not totally differently, but definitely taking the time to think about, am I laying the foundation for life to be easier in my 30s? Because, it's one thing to think that you're doing it, right? But then there's the proven strategies of real estate investing, which we're going to get into in a second. But, there's like the pie in the sky, I'll make, tons of commissions and, be super, super rich. Or there's like why don't we just, invest in a property every year or every other year, right? For like this decade of my 20s. That's it. I mean, like if you could be, right, if you could be in your 20s, like if you're 20 years old and you're like, if I could spend the next decade just adding one to my portfolio for the next, one of my portfolio every other year, that would still put you in a massive advantage by the time you're 30. Yeah.
It's always the old saying, right? Like the best time to start would have been 10 years ago for anybody, and the second best time is now. So really just starting that and realizing what you want is going to take a long time to get. So the sooner you start it, just because you want that and you say, I would love that for my life eventually. If you want it for your life eventually, you got to start it now.
100%. So when you made that decision, let's talk about the first win in the investing space. Yeah. What was the first win? What did that feel like? And what were the specifics of the deal?
Yeah, man. So I had a little bit of a lopsided journey going into the space. So I dove right into multifamily. I dove into the numbers of investing. I looked at what I wanted in a future, projected my life and how I wanted to retire, when I wanted that to be. And I just found that single family was a longer path to get there. And if I was willing to take on a steeper learning curve, I could get into multifamily, and really that would accelerate my timeline. So that's what I did. We ended up buying 2 properties that we own and operate, and still own and operate. One was a 40-unit property in St. Louis. The other was 144 units out here in the Midwest as well, in Kansas. And, both properties, when you're buying these big properties, you're owner operating them, you learn a ton. So we got beat up left and right on those deals. And, We did what's called syndication on them. So we raised money from investors, mostly friends and family, for the first couple of deals, right? And in exchange for that investment, they're passive. We give them distributions and part of the equity upside. But I would consider my first win was realizing that that's not the space I wanted to be in. I love the multifamily space. I love the commercial real estate space. What I don't love to do is operate properties. I don't like to be boots on the ground. I don't like dealing with contractors and banks and vendors and invoices and financial projections and analysis. I did them out of necessity, but what I learned that I love to do was more on the investor side and manage funds. So I learned in this space, you could actually manage funds and partner with other operators that have these massive companies, these systems, these scales, 40, 50 plus full-time employees, full-time acquisitions and asset management departments. And they will come to you with great deals and say, hey, we're closing on this deal. Will you raise money for it and partner on us with it? So, it's interesting because my biggest win was actually hidden in I wouldn't consider it a loss, but a big learning curve, and realizing, man, this isn't what I wanted to do. But in doing this, I found what I really love to do. And it's help investors, it's manage funds, it's find partnerships with big deals. And that really was my superpower. And since then, we've seen my personal and my investors' returns grow significantly just by being able to focus completely on my superpower and cut out all the rest of the noise.
100%. So you're running more of like a fund-to-fund model then?
Yeah. So that's, maybe an insider term for it, but we manage funds for, some people call them SPVs, if that sounds familiar, or special purpose vehicles or fund of funds. But yeah, we essentially partner with bigger operators in the space, and it allowed us to branch out beyond what we were comfortable doing, right? Because if we're comfortable buying apartment buildings in the Midwest, that doesn't give our investors the diversification of being in Texas or being in Oklahoma or being in Ohio, which I think is important. And so for me, when we took a step back from the business and I said, hey, how can we serve our investors to the absolute best of our abilities? It was not to pigeonhole them into what we were comfortable doing and what our capacity was. It was to partner and branch out and open them up to completely new opportunities that were even beyond our scope to manage. But we knew how to look at great deals. We knew how to vet out great partners, and we knew how to place capital where it should go.
So how do you go about identifying, right? So if you've raised some funds, right? Or you're in the process of raising funds, how do you go about identifying the right deal and or the right group to invest with?
Yeah. So it all starts with, in the marketing world, we call this, your avatar. Some people call it your ideal customer profile, your ICP. But it's who do you serve? I think you have to start there. We serve our investors, and our investors have a very specific thesis. Our company is President's Club Investors, so we work with a lot of salespeople, and a lot of salespeople have the same pain points. They want some cash flow to kind of off balance their slow months or their bad quarters. They want that equity appreciation with the goal of eventually replacing their income with passive income within about 10 years. That's our investing thesis. And that's really the big goal that we look at when we analyze deals, because in all of our marketing, all of our conversations with our investors, that's why they're drawn to us. So that's what they want. So when we look at deals, we have to look at, does this align with our goals, with the goals of our investors? There's a lot of deals out there that maybe don't, but they're great deals for somebody else. People are looking for generational wealth, or they want to pass their assets down to their kids. Okay, maybe you're looking for more of that very high-end Class A. The returns are going to be a little bit smaller, but the point is in that very long-term vision of growth. Or maybe there's new development that has super high type of growth, but no cash flow. So that doesn't really fulfill, what our customers are looking for. So we look for that balance. What solves the pain points that our investors came to us initially to solve? And then how can we partner with people who have those types of deals, who have certain checks and balances that we look for, right? We look for a lot of single points of failure in deals, which include a lot of partnership risk, a lot of bank and lending risk, a lot of geographical risk, like flood zones. So there's a lot of nuances we get into with the deal specifically, but it all starts with taking a step back and realizing, who do I serve? And my goal is not to place $50 million of capital this year. I'm okay doing 2-3 great deals a year if it's the perfect fit for who I serve. And then once you know that, the answer becomes really clear, and you start to find the deals that you're looking for.
So take me through a typical, because we kind of went a little kind of high level there, but take me through like a
Yeah.
typical vetting process. What are you vetting first? Are you vetting the sponsor first? Are you vetting the deal first? How do you go about, like, what's the, kind of that order of operation?
Yeah. So, anybody who's been in this field for a decent amount of time, I think generally would tell you start at the sponsor.
Okay.
Start at who's operating that deal. Now, here's where I think some people go wrong, and we're starting to see some impacts of this, and we will see some impacts of this in the next few years, is a lot of fund managers, people who are in my position, they might put everything on the sponsor. And I don't think that's right either. Because while I think it's the most important, you want to know who's operating your deals, because they're the ones who are managing the day-to-day. They're the ones executing the business plan. They're the ones they're going to give you these projections, and you're leaning on them to have those projections come true. But when people follow a sponsor completely, I think they miss a lot of risk that certain asset classes or certain deals they're have. What's been really common, and I'm sure you've seen this too, is great sponsors right now are branching out a little bit and to make deals pencil, whether they're branching out geographically or they're branching out in business plan. There's people going from apartment buildings and now we're going to do mixed use, or now we're doing light tech, low income housing. Now we're doing, class A versus class C. And they're doing that to increase their deal flow. And while the sponsors are fantastic people, we've partnered with them on deals. They're great. They execute, 9 out of 10 times, they're going to do fantastic. But when they take on those new deals, they're taking on additional risk.
Yeah.
So you might have a really, really great trust in a sponsor, but I'm still going to vet your deal and your business plan as if, you were starting a relationship from day one, because just because we have a great relationship doesn't mean that I don't think you'll take on deals with additional risk. I'll give you a great example. There's one partner who we absolutely love to work with. Been very, very consistent. Investors have been happy. Returns have been great. Over the past, 3 years or so, they pushed into new market. And one thing that's great about them too is they're vertically integrated. But what people don't realize is when you vertically integrate into a new market, you typically don't break even until you have about 1,000 units under management, just to round up. So for the first 1,000 units, in my opinion, you're probably buying a little bit more aggressively because you're taking a loss every single month until you could hit a certain level of scale. So that was one reason why we chose not to partner, even though we really, really liked that sponsor and that group. We didn't partner with them on any deals that they do. Didn't even look at them until they hit past that 1,000 unit mark, because I didn't want them to be in such a buying frenzy because they're fighting a loss that, they get a little bit more aggressive in what they do. So there's a few other things that I look for too beyond just the sponsor that I think a lot of people miss, and just in ways to mitigate additional risk on the business plan or the deal that they're doing.
Yeah. So general rule of thumb is vet the sponsor first, but don't have blind faith.
I
still do the
so.
due diligence. On the deals.
And I see it a lot. I'm on a lot of people's email list too, and they essentially advertise 100% of a handful of sponsors' deals, and I don't think that that's necessarily a bad idea, but it kind of makes me think, okay, did you do any additional due diligence on this deal, or are you just kind of an extension of the sponsor? No matter what they do, you'll do it. Which to me just isn't the right method. I think I'm not, talking down anybody who does that, because the sponsor is so heavily weighted on how that deal will be successful or not. So if you are going to pick a path to pigeonhole in on, it will be the sponsor. But to me, it just wasn't right for me and what I want to do and how I feel I want deals vetted as an investor myself.
Yeah, that makes perfect sense. So switching gears a little bit, you touched on this and then we glossed over it. But your investment thesis and the core question of who do I serve, the President's Club. Let's talk about that for a minute. So, because I love this idea, right? Of like, let's phase you out of, or not phase you out of, but at least get you financially free enough to be able to choose.
Yeah.
What career, what path you want to take. So let's talk a little bit more about the President's Club.
Yeah. So, for anybody who's in the sales space knows what that is. The President's Club really is like those top achievers. And, those are the ones who win all the awards. They're the top producers. They make the most active income. They win all the trips and the trophies and the vacations and the mugs and the t-shirts, right? And anybody who knows that President's Club, it can be a lonely journey. You end up sacrificing a lot, whether it's in your personal life or your family. President's Club doesn't come easy. And, some people end up getting it at some point in their life and they say, okay, I'm done, being on the road all day. I'm done, working 10, 12 hours a day. I have a family now. I have kids. I have other priorities. I want to ease off, but, I'm addicted to this kind of income. Not uncommon for a President's Club winner to be making, $250,000 to $1 million plus per year. Can't really get that in many other industries unless you have a very, very advanced degree, right? So that person is very specific because I was in that range. I know what it takes to be there. I know the sacrifices you make. I know the pain points that people need addressed in just wellness in their life, right? To balance out their income. And that's who really I wanted to serve. I understand that it's a lonely path to make it up there. I understand that it's a tight-knit community. And a lot of times the values are the same too. Values like being relentless in what you want, pursuing what you want with everything that you've got. Things like complete transparency and honesty and really holding your integrity while maintaining very high standards for yourself. So when you work with a group of people who all have the same values, you get along really well. You understand how to serve them even better, and you kind of speak the same language. So that's why, we narrowed our focus down to, it's called President's Club Investors. And one common thing I say is, well, I can't invest with you. I'm not in President's Club yet, but next year I hope so. It's mostly a marketing thing. Your values and your traits are the same. Of course, if you haven't hit club yet, that's totally fine. But it's the people who hit that range tend to like to have the same values and have the same goals. And those are people who we really resonate with and we really are able to serve the best. So, I feel you can make a company that is pretty broad and serve a lot of people in a little way, or you can be very, very narrowed and focused and serve a smaller handful of people in a much greater way. And that's the path that I chose to take.
So I'm genuinely curious, so your core niche is serving salespeople, highly successful salespeople who have disposable income, and your goal is to get them to a place where their income is replaced by their essentially like passive cash flow through these investments that they're making with you and your firm, right? So my question is, what is your how are you attracting these investors? What is the strategy? Because I see, dude, on LinkedIn, you're all over LinkedIn, right? So I know that you're crushing you're crushing LinkedIn, right? So outside of that, what's the sauce, right? What are you doing to get people to come invest with you?
Yeah. So LinkedIn is a really, really big one for me. And what's so interesting is I've been in direct sales, pretty much my whole life. I've cold called for hours and hours a day, 8 hours plus a day when I was grinding and building my business. I'm on the phones a majority of the day today, but I am actually a massive introvert. And I didn't think that was possible, growing up for introverts to be, successful in a field like this. I was always lying to myself. Looking back when I was 18, 19 years old, I always told myself, I'm an extrovert. I love meeting people, love networking, love talking. And I was really saying that to convince myself that I could be successful in sales because I thought that's what you needed. But really, I'm a massive introvert. I love talking to and meeting new people, but I have this social battery that just kind of gets drained where, you see people at networking events or at conferences and they're shaking hands and kissing babies and they could go, the whole weekend and they're great. To me, I need a breather after like an hour. I got to go back up to my room and kind of relax and kind of gather myself. So social media has been a really, really big one for me. It's a great way to build relationships and not really tap into my social battery as much and build great relationships. And the big thing about social media is a lot of people forget to make it social. Like I'm completely myself on LinkedIn. I say the things I want to say. I don't have people on my team who talk for me and post for me and make these great things. I don't have a strategy with LinkedIn. I just show up. I do my best to make friends. I build connections with people enough that they want to, get on a call with me. And once that relationship is offline, it's a little bit different, right? Where I talk to them a little bit more through text and through phone calls and get to know them a little bit more personally. But LinkedIn is a big one and podcasting. I also love to talk, even though I'm an introvert. So podcasting has been a great outlet. We have a show, we have a new one coming up that we're creating for next year. Love doing shows like yours where I meet a lot of people, but those are really big ones. You want to build your network. You want to build the circle of people who know, like, and trust you. And you want to build the amount of people who know what you do and who you serve and how you do it. And for me, social media has been a really, really effective, specifically LinkedIn, a really effective way for me to do that.
From a marketing perspective, right? So we talk about like lead magnets, funnels, and all that stuff. Like, how complex are your systems? Would you say that it's pretty like, it's pretty like easy, or like have you built out like some pretty like high tech systems on the back end?
Yeah, I actually love marketing. Marketing and sales, I think, go hand in hand. And I believe marketing is really just sales at scale. You have to understand a lot of consumer psychology for it. You have to understand, funnels and automations. And so for me, I have really one main lead generator. It's what I call the retire within 10 bundle. So again, you have to start with who you serve and what they're looking for. Salespeople who want to replace their income with passive income, ideally within 10 years. So through that, I have a retire within 10 bundle. You get a top secret investing strategy for sales professionals, a retirement calculator, and another secret bonus gift that I give out. And I don't advertise it as much. It's on my LinkedIn page. You can definitely find it if you go there. It's all over my headline and stuff. So, my page does act as like a landing page. Once people go to that website or they scan that QR code, they download it. There's a fairly simple automation. They obviously get the bundle. They get a couple messages from me, just welcoming them into, my network and a little bit more in-depth explanations on what we do. Because a lot of people at that point, they're just kind of learning. They don't really know what syndications are. They've never thought about owning apartment buildings. They've never thought about fund managers or, investments like this. So there's a fairly simple automation sequence to hopefully get them caught up to speed pretty quick. But then after that, it's more just me I send out my newsletters, a couple every month. I send out my deal blasts, again, a couple every month if we have a deal going on, deal updates. It's nothing too crazy, nothing in depth. Again, I don't want automation to take over my life. I want to have that relationship with my investors.
100%. So when you meet with an investor for the first time, typically what is that conversation? I'm genuinely curious, right? And so I'm curious, like, what is that initial conversation like? What are the questions that you're asking to figure out, A, are you going to be a good fit, right?
Yeah.
And B, what their timeline is, and all of these like more basic questions, but like really like, are we going to be a good fit for one another?
Yeah. What's a beauty about serving mostly salespeople and salespeople coming into the funnel is they totally get what a discovery call is. And they totally get the process that I'm taking. And they're so sympathetic to it, right? Because they do it all day, every day. Yeah. And so I spent a lot of that time really doing my best to get to know them. Most of our intro calls are going to be, 20 to 30 minutes. And, I'll usually say, hey, how did we get on this call together? What brought you into my world? And that right there will give me a lot of info. Typically it says, I saw you on LinkedIn. Your message really resonated with me. Saw you had a few common connections with me and they kind of spoke highly of you. So just wanted to meet you, see exactly what you do. Yeah. And then I go into kind of a high level overview of what we do. I want to know more about, them and what their timeline is. And then at the end of the call, I literally just say, hey, if this is something you want to do, is it something that you think you're still interested in pursuing? And, if they say yes, I say, okay, do you mind if I just ask you a couple, questions that I just need to know, just to kind of place you in the right boxes and to just know how I can serve you best. And then, they're salespeople, they get it. They're totally cool. Yes. Then I could ask them, okay, you accredited or not? Or what's your timeline looking like? Are you comfortable? And I ask some very real questions. Are you going to be comfortable wiring, $50,000 in a deal if comes up in the next, 6 months, like you said? Like what obstacles could you see coming up? You got kids going to college, you got new home purchases coming up. Is your car making weird noises? Is there anything that you could see? Because I use these projections to help hunt deals as well. And so there's a very real part of the conversation at the end that most people tend to respect because they get that you have a business side of it. And again, they do these calls all day, every day. And so they understand that there's a bit of discovery that needs to happen on these calls. But don't run them through a checklist, right? I don't really have a script for my calls, right? Just like this podcast, like we don't have a script. We're just talking. And I think if you're good at building relationships and you really, really care about what you do, it's easy to have the conversation be pretty fluid.
Yeah, absolutely. And actually that's a lot of the things that you're saying about like the discovery call and just got like the flow of it. I mean, that's a pretty standard thing, right? Like across a myriad of industries. So it's funny, man, like just being on this side of the table now and seeing how things work. It's just like, it's the same game, it's just, it's the same game, same core ideas. There's just different outcomes, right? So that's really, from my perspective, I share a lot of the same beliefs as you do, and a lot of the same thoughts that triggered your move from being a salesperson primarily to being focused on investing. That is the same thing that happened to me, where there was that light switch that went off, and I was like, I could do this for another 10 years and, like nothing would have changed, right? So it just, there's like that light bulb that goes off and you're like, oh, maybe I should be on the other side of the table. You know?
Yeah, I agree. And, whether you realize it or not, your life is a constant sales cycle. It's a constant sales game. I truly believe that. I just think the only difference is some people are aware of it and practice the craft, and other people are not aware of it and therefore, don't really ever get better at it. So, that discovery and part of the discovery, like you had mentioned, is learning if this is a good fit for that person, whether you're in sales, direct sales, or you run something else at a company. That's a big part of it. Is this a good fit for both people involved? And if not, that's okay. We can part ways as friends. I hope you keep commenting and liking my LinkedIn stuff. I'll do the same for you. But, we don't have to end the call overly excited about this new thing that we're going to do. It's okay to end it and just say, hey, it's okay. We'll just part ways as friends. Not good for you right now. Yep. So I agree. I think, just being fluid and not having expectations when you get on calls like that is really helpful too. Go in every call and I just pretty much say, hey, I'm just excited to learn about this person, see if we can help. And if not, that's okay with me. And you avoid a lot of disappointment in that way too.
Absolutely. So your strategies and your model revolves heavily around, passive investing through your fund. Yeah. And you're going to, cut checks to sponsors or operators. And then you are going to, your investors collect, either you said dividends or, whatever you want to call it. Right. But like they're cash flowing. And they're receiving, and they're receiving passive cash flow. Someone is listening to this podcast right now who is saying, I don't have that kind of money. Yeah. But I want to get in the game.
Man, that's tricky, because one thing that I love about working with salespeople is you control that, right? It's not like I'm talking to somebody who makes 70 grand a year. They're going to get a promotion in 3 years. They'll make 73. And then, they have this very, very long journey. When you're in sales, the number one thing from an ROI perspective you should invest in is yourself. So a lot of times our investors, they already have sales coaches that they pay. They're already in sales masterminds and programs. They have invested in themselves pretty heavily to make the type of money that they're making. So when you control your income almost completely, most salespeople are pretty much 100% in control of their income, with a very few exceptions. When you are able to invest in yourself, you can drastically fast forward that timeline. And that's what got me into sales. Is I didn't want to work that 40-year corporate job. I didn't want that 40-year retirement plan. I want to retire by the time I'm 37. So that's hopefully in 7 years. And sales was a way for me to do that. So if you're in sales and you're listening, just know you're in a unique position where you have so much control over your income. Invest in yourself, invest in the people to get you there, invest in the knowledge to get you there, because you're not time away, a certain amount of time away, you're a certain amount of skills away from being able to do this. And you just need to acquire those skills, and it's okay to pay for them formally. I think that's the fastest way to grow.
Yeah. And actually, I could not agree with you more on the investing in yourself. There's two types of people. There's the people that you see at the conferences every single year, and they're in the exact same. It's just like, it's like, sold 12 houses last year, sold 12 houses this year. And they're just coming because they love the taste of the Kool-Aid, but they're not actually going to do anything with it. And so I think that the investing in yourself piece is crucial, then do something with it. Do something with that knowledge. Do something with that, with what you're investing into. Because if you're just investing in yourself, but you're not actually doing anything with that additional knowledge or that additional support, then you might as well not have spent the money at all.
Yeah, man, that's massive. And I think anybody who does like network regularly or does, certain conferences every year, like we do, you see it all the time. Oh man, last year just wasn't good. You know the market. Yeah, I know the market. And then the next year, well, last year, I had this other gig or this other business kind of took a lot of my time, so I couldn't do what I wanted to do. Okay, that's fine too. And it's just, when you're investing in yourself, just realize that it doesn't take that much action on these ideas to have a massive ROI. Now, personally, I like personalized coaching. It comes at a price premium, but there's that accountability piece to it. I worked my real estate business for about a year before I finally said, why not? I'm going to hire a coach. I'll sit down with her for an hour. I remember it was $300 maybe it was $250 or $300 for an hour. And I thought to myself, oh my God, like that's so much money. Is it worth it? 1 hour? What is this person going to show me? And I walked out of there thinking to myself, I just wasted a whole year of my life. So that coach that is very, very helpful, that can actually accelerate you, they're going to be worth 50x what you pay them. It's not even going to be a question. I literally walked out of there. That hour blew my mind. And I decided from that moment on, I'm not ever going to do something again without hiring a coach to just get me there faster. They'll really change your entire perspective, change your entire life, and change your entire earning potential. So I personally like that. I'm willing to pay for that premium of having somebody hold my hand and, walk me through exactly what I need to do. And then it holds them accountable for you getting there, right? No coach wants you to pay them, 10, 20, 30 grand. And you come up and say, dude, this is not working for me. They're going to make it work for you if they're, worth their salt and have a big reputation to protect. So I like that. I like bringing that person on in my journey, and it gives some accountability for them, kicking me in the ass, but also I can kick them in the ass too if I feel like I'm not adjusting well, and then we can work something out. So I think that's massive. Pay a little bit of a premium for that premium experience, that accountability. It's gonna go miles for you.
Two things come to mind here. So the first one is the money's a big non-starter for a lot of people. Yes, like when it comes to coaching and training and just learning in general. And, obviously there's a lot of free information out there. The problem with the free information is that like a lot of times it's just not good, it's just wrong. It's just wrong information. So, and honestly, in today's day and age with, we're in the guru generation right now where everyone's a guru, and like they're like, you're not a guru, right? You're just charging people five grand to like literally you're swindling them. So it's hard. It's hard to find a good, so, I found my coaches primarily through referrals, right? So like I obviously like they were big or whatever, but like I vetted them. The thing that I think we don't talk about specifically with salespeople, right? Because, that we share that, and I'm hearing all these things and now I'm getting excited, right? Because I'm like, oh my gosh, like we could talk about this for hours. But for me, it was actually less about the money and more about the ego. I wanted to do it all on my own. Yep. I wanted to prove that I had it so good that I got it, that I didn't need so-and-so coach to like give me, like, I'm going to build the number one real estate empire in the country, and I'm going to do it all myself, baby. Yeah. Yeah. That I think lasted, that's a massive one. Dude, 100%. And same thing, man. It was actually a little bit more than a year for me. It was like a year and a half. And I went in, so I basically got tossed a freaking softball. Like it was like put up on a tee for me. It was like a $1.6 million listing, and it was a referral. So, $1.6 million listing at the time was probably like 2.5 million today. Right. It was a monster property, especially for a first year, right? I was only in the business for like 16 months, and I shot the bed, dude. I went in there and I just totally tanked the listing appointment, and they went with some other agent, and me today, oh dude, I would have gone in like that in 30 minutes, would have had that thing signed. But the thing is that it was that experience walking out of there, I realized I didn't have a legitimate listing presentation. I didn't know what to say. I was shooting from the hip. And it was in that moment where I am never going to let that happen again. Yeah. I'm never going to shoot from the hip again. And I need to find someone to give me the tools to actually go out there and do what I say I'm going to do, which is build this like massive real estate team.
Yeah.
So
I think everybody has a story like that. And the ego is a massive part of it. I had a big ego. And one thing that's so crazy is it is so foolish and really, let's get harsh, ignorant to think that you cannot benefit from somebody else's experience, who's, especially if they've been in business for, 15, 20 years plus. There is not a single scenario in which that person does not help you in some way. They're going to save you time. They're going to save you money. They're going to make you an enormous amount of money. So I think that ego exists a little bit in all of us, and part of maturing and growing and part of making the big money is reducing and then eventually eliminating that ego, realizing that you can and you have to look for ways to learn from everybody. Doesn't mean you have to even like them. You don't have to like somebody to learn from them. Doesn't mean they have to be more experienced than you. You can learn from anybody, but the best of the best are constantly learning, constantly refining. And I want to go back to what you said. For some people, the money is a non-starter. They feel it's a lot of money for them. It's an investment. The money is non-negotiable because the only thing realistically that sets your attitude for a program that you're following is your buy-in to it. And if it's free, I'm going to challenge you and say, if you're going to rely on free information, what have you taken action on that's been free information at this point that has catapulted your business? Maybe it's something. Or should you pigeonhole yourself and say, I'm going to pay this person, whatever, 5, 10, 20 grand. I'm just going to follow their system. And now I'm invested in this thing. I'm on a mad dash to make up this, investment. And I'm going to really, really hone in, focus in, show up to the calls, show up to my meetings, read their material, go through their courses. There's a big buy-in. There's a big, massive difference between people who are looking at the free stuff and people who have paid a premium for this, even if it's the same content, because you just don't see it that way when it's free. You just really don't see it and you don't follow it. And it's hard to sift things out, right? You got a ton of free information, but when you pay for one set of information, you're going to follow that one and be bought into that one. So the monetary investment, in my opinion, is non-negotiable, but also leaving that ego. And once you are comfortable with those two things, you really unlock a massive amount of potential that I don't think exists without those two things happening.
Yeah, I couldn't agree more. I could not agree more. And that actually was the second thing that resonated with me when you were talking about, paying for that experience. And, you saying it's ignorant to think that you can't learn from anyone else. Like, I'm the oldest, so I don't really have like oldest in my family. But do you have any siblings?
I have one older sister, and then a couple step siblings that are mixed older, younger.
Yeah.
Right in the middle.
If you're your younger sibling, like, hey, you learned from like all of her mistakes.
Yeah.
Right? So she paid the price for you.
Yeah,
right?
exactly. Yep.
So it's the same concept, right? You're paying for that person's failures. Basically, they're packaging up all of their failures, and they're saying, "Hey, I'm gonna show you all the things that you shouldn't do." Just how I'm showing you all the things that you should do, but it's really the things that you shouldn't do, right?
Yeah.
And for that's what you're paying for. It's the collective, mess ups over the last 10 years, 20 years, the lessons that I've learned that you're paying for. And whatever the price is that they're charging you, the monetary value of that is actually like probably 10, 20x.
Yep. Yeah. Even in mistake costs, lost time and opportunity costs, pretty intangible, you're going to make it back. But you will also be able to see a direct correlation with your income increasing for a good program, for sure. It's no doubt.
100%. Well, we're coming up on time here, Justin. So want to ask you a couple of concluding questions here first. So the first one is for someone who is starting their investing journey, whether they plan on being more active, like you and I, or they plan on being more passive. Well, what is like one piece of advice that you can give? We'll call them Gould nuggets, if you will, right?
Yeah.
So in traditional Gould Mine podcast,
I love it.
Like final Gould nugget, one for the active investor and then one for a passive investor.
Yeah. For the active investor, I would say spend a lot of your time figuring out your niche, whether that is investment strategy, asset class. Like, a lot of people start off on residential because it's easy. That's what you know. But there's a whole world of investments out there. A lot of you've never even heard of. I heard one recently that's investing in litigations. Like you can almost place bets on who's going to win lawsuits. And so there's just a whole array out there that you would never know. Spend a lot of time thinking about what niche you want to dive into. Like what interests you? Where is the macroeconomic environment taking us? What do you feel is a good investment? And I think that's where you spend the most time, because in the investing space, in real estate and investing in general, alternatives in general, like there's just everything you could do. If somebody comes to you and says, I'm a real estate investor, I have no idea what that means. You could be doing one of 200 things that I could just start rattling off. It doesn't really tell me anything, but figure out where you want your niche to be, and then jump in with both feet on that niche. Dive in, find the mentors, drink the Kool-Aid, go all in on that thing, and then be the best at that thing instead of being broad. I really believe in going deep and not broad. So spend a lot of time on that niche, one that you're going to fall in love with, because that's going to be a massive predictor of your success. If you're passive, you have a little bit of that too. You have to find where your niche is. You have to find out where you want to invest, who you want to invest with. A lot of your time goes into vetting, people like me who are going to be conduits of your money and say, hey, this is a deal we're investing in. Would you like to invest in it too? Make sure those values align. Make sure the goals align. Make sure that you are knowledgeable enough in this space to know when something doesn't really add up or make sense, but also know, okay, hey, I don't know the things that I don't know. The reason I'm a passive investor is because I'm not a real estate expert. I need to align myself with real estate experts who are going to be good conduits of my money. So spend so much of that time up front on that due diligence, finding out not only what do I want to do and where do I want to work, but who do I want to work with? And those are going to set you up for a much smoother path in the future.
Very well said, my friend. And for anyone that wants to reach out to you, what is the best way for them to get in contact with you and start that conversation if they're liking what they hear today?
Yeah, I mean, you mentioned it. I'm most active on LinkedIn. Check me out on there. It's President's Club Investor or Justin Moy. You should find me. If you don't have a LinkedIn, President's Club Investors is my website. There's the free download that I talked about in there a little bit earlier in the show, or Retire Within 10 bundle. That's a fantastic resource if you're in sales and looking to replace your income with passive income, ideally within the next 10 years or so. So President's Club Investors, either online or on LinkedIn, really good place to find me.
And you also have a podcast, yeah?
I do. We have a podcast called Passive Real Estate Strategies, which I'm pulling back our production on. I'm going to still make content on there, but it's going to be a little bit more curated, a little bit more individual topics I'm going to be talking about. We're actually releasing another podcast that's going to be more specific to salespeople that I'm just not ready to talk about just yet. But if you follow me on LinkedIn, I'll be putting some updates there because we're putting on some final screws on there. It's going to be a really, really awesome show. So Passive Real Estate Strategies is also a good one if you want more specific real estate knowledge as a passive investor.
Love that, man. And all of those things will be linked down below your LinkedIn and your website so that people can find you easily. Justin, thanks for stopping by, my friend.
Danny, man, this was fantastic. Thanks for having me.
Absolutely.